Welcome everybody to Markonomics 101 presents Hoot Loot, the place where you come to be informed, be amused, but never be misled. Today is Saturday, December 4th, 2021, and I just have nothing but bad news for you. Today's show is called Is a Depression Imminent? We've talked about the inflation issue. We were well ahead of the other people on it, but we also think the economy might be going off a cliff. Crypto is finally, it looks like it has just had it, and we're going to show you some on that today. And the reason I'm have the Hindenburg behind me, the Hindenburg was a Zeppelin or a blimp or a dirigible as they call them, and they used to have those, and there was a crash of the Hindenburg. The Hindenburg Omen is a stock market signal which often presages crashes. And the Hindenburg Omen is basically something that I'm going to talk about in the context of it raises the odds of a crash or a severe market decline. And what it means, what we're seeing is that the stock market looks like it's ready to really hit the skids. So, we're going to have a lot of incredible information for you. And if you would like and subscribe, I'd appreciate it right there and right here. And we'll see you in just a minute. Okay, welcome back everybody. We've got some great information for you today. This first chart shows you the intrusiveness of government into our lives and how it has exploded in the last year or two, and basically why we need to vote out all the incumbents, because basically the government wants you as a dependent, as a slave. They want to control you by being responsible for all your income and all that, and give you no opportunity, for any independence. And these two charts kind of show it. They're from a firm called the Real Advisor, and I think that they're terrific. So that's why you vote out the incumbents, is because you don't want the same group of people doing this kind of stuff. You don't want people that have 22 terms, get rich, and have people crapping in the streets with methadone needles, Nancy Pelosi, and you certainly don't want those people in office ever again. And those are the people that have caused the problem. They should never be reelected. Never. Not in a million years. All right, let's go on to the markets and stuff. We have some amazing stuff to show you. First, of course, is the canary in the coal mine, Bitcoin, and Bitcoin's on everybody's mind right now. All I hear is Bitcoin, Bitcoin, Bitcoin. Well, I think Bitcoin has had a flash crash overnight, and it's trading below 50,000 right now as we speak. It traded down to about 44,000 overnight. So this chart right here looks like Bitcoin may have double topped, and it's on its way down, but it really hit a vacuum. The other canary in the coal mine that we'd love to have is Tesla. This one just blows my mind. Elon Musk, I first of all, he sold a bunch of his personal holdings. He's entitled to. I have no problem with that. But interestingly enough, he's selling personal holdings right at the top. That's kind of interesting. And you know, he's also holding a lot of deposits of people for some of his other ventures. He says SpaceX now might go bankrupt. So I've told you that he's not going to Mars, he's not going to the moon, he's not doing any of that stuff, and now SpaceX might go bankrupt, even though it was priced at $74 billion. How's that? Unbelievable is all I've got to say. But the insanity is about to end, and that's the thing. It's going to be an ugly ending. So we're going to go to the Dow Jones Industrials, and right now the Dow Jones is breaking down quite a bit. As it was looking good a couple weeks ago, and we thought it might start moving up, but it had sort of a false breakout, and it started to go down. Now, one of the things we've looked at is new highs versus new lows, and the Hindenburg Omen, which I alluded to earlier, is an indicator which is computed by looking at an index's new highs versus new lows, and if they're both high numbers. In other words, if you have more than 2% new highs and more than 2% new lows at the same time, while your index is making new highs, that is usually a reversal signal, and it's very significant, and it increases. Every crash has a Hindenburg Omen, but not every Hindenburg Omen produces a crash. So just keep that in mind. The odds have increased dramatically. So with the Dow, now you're noticing some new lows on the Dow, but it had new highs the whole way. Even with corrections, there were still more new highs and new lows, and you kind of could tell that from that point of view that it was still pretty strong. We're going to show you the NASDAQ 100. Looks like it finally broke down too out of a parabolic run, and also this is another one that has been really strong. It broke out, it had a nice move, and it looks I want to show you now also highs versus lows. This is another one that had Hindenburg Omens, where there were more new lows on some days of the NASDAQ than there were new highs by a factor of like 5 to 1 when I was making a new high. So that tells you the market's in trouble. And this one also I've circled in red certain places where you don't have more new lows expanding, even though you have a correction of a certain magnitude. And like right on the left side of the chart, I circled a correction where you had no expansion of new lows. On the right side of the chart, you have an expansion of new lows with the correction. So something's different about this move, and that's what we're trying to convey. The S&P 500 still looking good, but it's starting to break down just a hair. It also is another one that has had in the box, the green box, it has had new highs more than new lows for a year, and finally with this correction it finally is starting to break down. So that's an interesting one to look at. That's what we're keeping an eye on. Finally, the S&P small cap, it hasn't broken the trend yet, but look at this. This is the NASDAQ composite. Most of small caps are NASDAQ or small cap type companies on the NASDAQ, really. They don't go in the NASDAQ 100. Well, these things are just bleeding red. There's so many of them making new lows versus new highs right now that you would never know that this thing isn't just breaking down like crazy. This is why I think that we are at a critical juncture in the stock market, and we might not even get that Santa Claus rally that everybody expects. I think we're not going to get it. I think we're going to get the Grinch if it get anything. It is not a good time. It is imminent. I think things are breaking down. I would not want to be messing around with this thing. All right, Dow Jones Transportation, there's another one. This one broke up, broke down. Now, transportation is very important to the economy, and the economy looks like it's going off a cliff. I mentioned that earlier. It's not just crypto that's getting blasted. Stocks that are economically related are showing that we're getting some weakness in a hurry, and I mean a big hurry. So the U.S. dollar is part of the reason why. The U.S. dollar is actually, it's going up because the it's doing the Fed a favor, and by going up like this and doing well, it's one of the reasons that gold is going down. And I also want to mention that the U.S. dollar went up and Bitcoin went up at the same time. So you can't say that Bitcoin hedges the U.S. dollar. There's no correlation between the two. I had somebody the other day about Bitcoin. I get hassled 5 times a day about Bitcoin. Oh God, you a foreign exchange? You want to buy Bitcoin? No, I know, no thanks. And so I asked this person, do you know who the president is? Do you know where headquarters is? It takes like 10 minutes to answer the question. She has no idea what Bitcoin is. Unbelievable. Anyway, the US dollar is looking really strong. I'm very surprised by it. But this tells me that we are going, the US dollar in a depressionary, recessionary environment would be strong. It would tend to be strong. And that's one of the reasons we're starting to see that. Right here, this is 20 years. It's right in the middle of the range. If it breaks out above the green, it's going to set a new trend into place that is a different trend than what people are thinking now, than what is the conventional wisdom. All right, right here we have 5-year treasury yields, and this part is interesting. All of the yields from 5 to 30 are going down like crazy. Now, I can't believe that because we have inflation, and we've shown you in prior weeks inflation has been booming. So we have yields going down and inflation going up. What could possibly cause that? A recession, depression, some kind of demand, some kind of demand shortage that we don't have. That's the only reason I can think of that would happen. And we're having such major moves that recession, the depression is not far off. And I prepare yourself for something like that right now. the 10-year, look at that, a total breakdown. This thing is at 135. I mean, it is unreal when you have inflation running at 8 and you have a 10-year running at 135. I can only think that in the future we are going to have an economic slowdown like crazy, like a depression that would really, really suck the economy. And, I don't know, inflation, I think, is still going to go up. So I don't know why anybody would buy this at any price. And same goes for the 30-year. The 30-year is making new lows, or it's close to making new lows. That's just amazing. We're seeing a lot of indexes and companies make new lows, not new highs, new lows. The market didn't make new highs all that long ago, and they're already making new lows. We're seeing relative strength breaking down. The Treasury inflation protected securities. Now those are those are showing a little bit of life, and we'll look out and see how those break out. My expectation is to break out positively because I still think we have inflationary pressure. It's not transitory. Sorry, Jay Powell, it's not transitory. It really is not transitory. I mean, the fact of the matter is, when you look at things like the high yield. Well, here's a high yield bond fund, and the high yield bond fund is also broken down. So we're starting to see economic problems. Bonds are breaking. When these junk bonds break down because there's default risk goes up, and that's another sign that we're heading toward a depression, recession type of scenario in a hurry. We're going to go now to cryptos. Everybody wants to talk about them, and we're going to talk about Bitcoin Cash, the one where the felon runs the company. I don't know. He doesn't really run the company. He's offshore, and he claims to be the marketing director for a company that doesn't exist. I know. I realize it. It's insanity. I must be in the fifth dimension or something like that. But Bitcoin Cash, this thing is crashing. This thing is, I think the whole crypto sector is looking pretty bad. Even Ethereum has made a double or triple top. You're going to see double and triple tops all over the place. There are an awful lot of indexes that have done that, a lot of stocks that have done that, and those are bearish reverse signals. So Ethereum looks like it's broken down from a triple top. And Ethereum, if it's not making a new high, there's nothing making a new high. Cryptos are getting clobbered right now. And I think the crypto collapse has just begun. Litecoin, same thing. It was in a bullish saucer pattern, which I really liked. And I thought, well, maybe this thing it did break out, but it didn't continue. And when it broke down, these are the kind of things you have to be prepared for, that you get false signals, and sometimes you get real signals. I think the cryptos have broken down. This is another sign of it. Ripple is probably, Ripple's another one that's broken down, another sign of it. So every one of them have broken down sharply, very sharply, and that's critical. Now, of the other companies that are related, the ETF is closed 25% lower on Friday than it came out. It's probably another 10% lower now because its holdings are 10% lower. So it's really pretty interesting how much money is starting to be lost now in cryptos, and I think it's going to be lost in a hurry because they don't do anything. Have you ever used a crypto for something? I haven't. I can't think of one person that has ever used a cryptocurrency except to gamble with. They have no use. So I just don't get it. I totally don't get it. Coinbase is the kind of the broker, the big broker. That thing broke down 2 out of a saucer bottom. That thing has not done very well since it came out as an IPO. Robinhood has had an even worse time. I mean, look at that. This thing has just gone down, down, down. It's under investigation. They have compliance issues. They have absolutely not been a good investment for investors. So again, Robinhood is somewhat related to cryptos, and this is one that's not doing well. Cryptos are continually related to scams and illegal activity. So I don't know what the appeal is. I don't get it. But people seem to think they're going to get instantly rich. I don't know why. They're going to become instantly poor is the thing that's going to happen. Yeah, I know. People are going to complain, oh, I just bought Bitcoin and I just made so much money. Nah, you're going to lose it all, pal. Trust me. Sorry. I've had it happen. I've been that sucker. I've been it. So it's going to go. Um, Overstock.com, a retailer that took Bitcoin from 2013, less than 0.5% of sales are in Bitcoin, but it trades in sympathy with Bitcoin. This one also made a double top, or and this one looks like it's going down too. So it's another one that suggests that the crypto craze is starting. It is really at the beginning. It's the beginning of the end, not the. This hasn't ended. This isn't like buy the dip time. In my opinion, there may be a dip and a bounce, but this is the beginning. The double tops, the triple tops are the beginning of the end of a bear market in that asset class. There's a bear market in almost every asset class that's about to go on because we have this economic depression coming on, and that's absolutely going to affect the value of asset classes like crazy, including liquidity. Riot blockchain, again, the blockchain is not doing much for it. It looks like it will probably break down. Hasn't yet. We'll watch it. Now we're going to go to the big cap Nasdaq stocks, which are very critical to how the Nasdaq behaves. They've been much stronger than the smaller stocks, as you can see. Even though the Nasdaq finally broke down. Apple has gained 250 billion in market value ever since it announced that it's going to have a self-driving robocar. Amazing, amazing. Amazon also still behaving really well. You gotta hand it to them that they haven't broken down yet. Facebook, on the other hand, humanitarian Mark Zuckerberg's company, company of virtue, WhatsApp, Instagram, smut, drugs, scams. Mark Zuckerberg, what an ethical, honest man. Oh, I just am so happy for him. Anyway, they broke down quite a bit, and this company's in a lot of trouble. I think with the disclosures of mental health breakdowns to girls and things like that, they're going to have class action lawsuits like crazy to defend. So Google continues to do well, but it looks like it's close to breaking down. Microsoft is coming down a little bit, but it continues to do well too. Netflix, it broke up. It now looks like it's breaking down. Now we're going to know some of the sectors. The sectors just look terrible. The airline index is at brand new lows, and all the airlines look just like this. They are at brand new lows, even though oil prices are down and all that. Part of it is people are not flying that much. There's all sorts of mandates, and let's face it, who wants a colonoscopy by the TSA followed by some fight, with a stewardess over a mask? Nah, I think I'll pass on that. Bank index is broken down, and that bank index was responsible for a lot of the advance that occurred recently, and it's broken down. It's another reason I've become pretty bearish on the market now, and I think it's pretty close to doing something. This is broken down because the yield curve is flattened. The yield curve is, again, the difference between long-dated maturities, like 30 years versus 5 years. And when the yield curve, when that differential, 30 minus 5, is high, that's a positively sloped yield curve. That's usually good for banks because they have a high spread. They borrow at the short end and they lend at the long end. So when it flattens, it's the opposite. It's bad for them because they don't get as much of a spread. So the bank index is broken down as the yield curve is broken down, and that's exactly what we would expect to see happen. The broker-dealer index also looks like it too is breaking down. The financial sector is now not adding any upward impetus to the market, and so that is also a negative that could turn really ugly if there's an implosion, and I think there will be. I hate to be the bearer of bad news, but this is what's coming down the pike. The real estate index, people thought was in a bubble. It's not. It was up 20% year over year, but it's up because the purchasing power of the dollar has gone down. Now, it's hard to understand why the dollar index is up and the purchasing power of the dollar is down. Okay, because you can buy less with the dollar than you could a year ago, but yet the dollar index is up. The dollar index compares the dollar to the euro, 70%, the yen and the Swiss franc and a couple others, and I think the pound. So you're really looking at a comparison to like 4 other indexes. It can go up and still be losing value because they're losing value faster. And I think, that could be going on. They have negative interest rates. We're not negative quite yet, but 135 might as well be. Okay, so real estate, it's not in a bubble. It's kind of pausing here, it looks like, but it's going to be probably a good hedge against inflation. The commodity index now this is broken down, and I put transitory inflation because Jay Powell would love to think transitory inflation is occurring. That if we just had a bump up in inflation and it was going to just magically go away and fritter away. Oh, inflation went away. Well, that's not really what's happening. We've had a correction in some things, but there's so much built into the pipeline through wage increases and the increases in energy and all those other things are built in, and they're continuing on. So that and the amount of dollars that are going out to purchase things that don't exist anymore because they're not being produced. And so you pretty much are going to have it. It's not going to be transitory. It's going to be it's going to be fairly long lasting, and it's going to be very nettlesome. Look that up, Jay, in the dictionary. Nettlesome. And by the way, congratulations on your re-election. Sheesh. Okay. And again, the CRB commodity index, and when you look at that rise over, that's a 20-year monthly, and you look at that rise that's occurred off the bottom, that's a pretty significant rise. And, we really cannot expect that there is, there's a lag in when inflation is reflected in goods and services. We haven't yet seen the worst of it. We're just beginning to see it. It's going to be really bad. Oh God, and it's not going to be fun. I can tell you that right now. Okay, now the agriculture fund, food has been one of those places where inflation has been really incredible. The agriculture fund has kind of paused a little bit, but it's still still in an upward trend. All I know is my Big Macs are more expensive than they were 2 years ago by quite a bit. The livestock index is going up. Part of it is that there's a shortage of workers because they don't want to be, there's mandatory vaccination issues that preclude some people from working or want to work or willing to work, whatever. But, so prices are going up. Then on the other hand, you have the increase in, vegan, plant-based food and all that. So, livestock is not leading the way. Sugar is broken down a little bit. And that's another food substance that is kind of pausing here a little bit, and it does make it look like inflation is transitory. We'll show you the fact that the CRB has gone up that much shows you it's not. Basically it's not, in energy and all those other things. We're seeing just a little pause in them for the moment. Wheat, that's another one that's it broke up and broke down a little bit. I'm not sure which way it's going to go. This one, there was a drought, and the drought caused wheat prices to go up. So there you go. There's your blame. Blame it on the weather. Corn is uncertain right now. It could break out, break up. We don't know. It's another one that's used a lot in sweeteners, and it's ever present. So that right now commodities are not being pulled by food like they were before, and that's an important thing. And that's part of why the recession depression argument makes some sense, because they would also reduce demand quickly. Like there was a 28% gap between Black Friday sales and what was expected. Okay, now those kinds of things are the ones that are those kind of things are starting to weigh into the market, and are signals that catching people way by surprise. Crude oil is another one that's come down a little bit. This is another reason why people are thinking that inflation is transitory. I think crude oil will resume its way up. Natural gas is broken down now right now, and that's another reason there's not enough demand or whatever. But this is all of these commodities that are breaking down. What they're telling me more than anything else is that the demand is going down for them, because we know the dollars are out there chasing them, but the demand must be just falling off a cliff. Okay. All right, and gasoline too, coming down a little bit, breaking down. So the energy complex is kind of coming down. The food complex is not really pushing that hard. And why isn't the Fed declaring victory? Because they know that rates are ridiculously low, and they know that inflation exists and all that, and they're stuck. If rates go up a lot, right now interest on the national debt is the fourth largest component of the deficit of the spending. If rates double or triple, which they should, it would become the number one. It would just be a bank buster. We're already in deep trouble. I mean, we're already in deep trouble as it is. That would just put us in deeper trouble. All right. So gold still, it's reacting, I think, to a stronger dollar. It's in a pattern that is long-term positive. You know, American Express, credit card companies and retail are 70% of the economy. Look at that, broke down like crazy. They did not deliver. Christmas time, they're not delivering. They're not delivering Black Friday. The online sales, they kind of, they're not what they expected them to be. And you've got the MasterCard also breaking down, also not good news for retailers because, right now Amazon, for example, is thinking of not using actually, that MasterCard is not the one, but it's Visa. Here's another one that's breaking down. So the three major credit card companies are all breaking down, and that is a terrible sign for the economy, especially when there are dollars out there that could chase these goods and are not doing it and don't want to do it. Okay, Home Depot is the only retailer that's doing okay. I'm not quite sure why it's doing okay, but no, Home Depot's okay. But in general, retailers right now, they at first it seemed like they had blowout numbers, and then all of a sudden the numbers just fell off a cliff. Nordstrom is another one. Look at that, totally broke down. Another retailer that's broken down, and that is just not good news. Target double top, maybe, I don't know, but it's ceased its advance, and so again, it is not showing any kind of retail sales and sponsorship that it did before. And the same goes for Walmart, breaking down, maybe, and it's not the kind of company that this is the kind of company that carries a lot of weight, and it looks like it's breaking down. And when you start to see this kind of stuff, when things break down simultaneously like they are, it means bad things, and that's what unfortunately, not good. Okay, FedEx, here's a company that delivers goods. There's a 5-year graph, and it isn't doing very well either. So FedEx was doing well. It was making new highs, and all of a sudden it's come down, and it's right at support. It delivers goods. It's very correlated to the economy, and it's not showing the economy as healthy at all. And UPS also looks like a double top. I'm not sure about this one yet, but it doesn't look particularly healthy. Triple M is a basic infrastructure company. They're going to get a big contract or 2 or 3 or 4, and look at that, they broke down anyway. It's just the process of all these contracts and the government vote out the incumbents. The whole thing is so screwed up that they add no value, and they just they pump up stocks like this. They add no value at all. So I guess that's it. But remember, vote out the incumbents. We love you. Be informed, be amused, never be misled. And a depression is imminent. Share this with your friends, please. Is a depression imminent? Well, there's a lot of signs that it is. Cryptos are collapsing. Please don't not heed these warnings. And if you'd like and subscribe, we'd like to see you back next time. And we will talk next time about a whole rash of new things.